You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent Fleskens, your host as always. This week we are talking buying. It's a big topic that so many friends of mine around the barbecue, family, colleagues, trying to figure out how they get their toes in the water, either for the first time as a homeowner or an investor trying to get a property that actually stacks up from a subdivision or development potential. Everyone right now, given the supply issue in the market and the constant demand levels that we have seen over the last couple of years, is asking that big question. How do I get my foot in the door with some level of confidence and value to make sure I'm not paying too much? Or how do I even just buy a property right now? It's never been so hard. And the reality is, data-wise, it's never been so tough. I've got my good friend and colleague, Lachlan Delahunty. He manages Performance Property Advisory in Western Australia, Perth's largest buyer's agency. So he's got all the data, all the anecdotes to share with us today. He's a fantastic storyteller and a great guy. He's in the studio to share those stories and a number of tips for us today. Lachlan, thanks so much for coming in.
Thanks, Trent. That was quite the introduction, and this has been long overdue.
It has been long overdue. I think it's gotten to such a boiling point in Western Australia that I thought we can't not do this podcast today. I believe if I was to do a bit of a poll right now as to what do you want to hear from our listeners, it would be, please, what is the secret sauce to being able to secure a property right now? Not even something that's at a 10% discount that you might expect from a really good deal or that a buyer's agent might be able to secure for you. Not even an off-market deal, if that's what it is. Just how do I buy a property right now at any price point along the spectrum, any housing type? We know there are some housing types that are far harder in some areas as well than others to buy. And you've got those stories and that data. A lot of wins and a lot of misses as well, which is the reality of the market right now.
Far more misses than wins, that's for sure. I think we're up to our 11th contract that we've missed out in the last 3 weeks, and that's the nature of the game we're in at the moment.
If that was the reality for you and your team 3 years ago, would you be saying there's serious questions to be asked of what's going on with your team? And obviously a different story now.
Yeah, absolutely. Like when we started buying in Perth, and we haven't been buying in Perth forever for the obvious reason the market was flat for a long period of time. But I was running around Perth in late 2019. There was 19,000 properties on the market, and agents were begging for us to put offers in. And you look back then, and I remember the first property we bought for Performance Property in Western Australia was a property in Mount Lawley on 5th Ave, advertised for 120 days at 125. And I put a cheeky offer in at 1-1, got accepted within 2 hours. Yeah. Mate, you know, as a buyer's agent, your heart stops. Yeah. It's a win, but your heart stops. If they accept the property you offer in the first hour, we've overpaid. Yep. And I was looking through all the data. I'm like, that's a really good deal. And since then, they sold it late last year for 1.45. So they did really well out of that. But at the time, it's like, okay, have I overpaid? Straight away, you've got...
Have I overpaid having won a bid 150 grand lower than the asking price?
But that was the makeup of the land in 1890 when there was so much uncertainty, so much stock on the market. We just had 10 years of a downturn, no confidence in the market. We fast track here where we are post-COVID in 2023, and now there's, as of last week, 5,600 properties on the market, and it becomes really, really difficult. And like I said, we're trying to buy 20 properties a month. We've been able to hit that benchmark for the last 12 months, but now we're in a situation where we've missed out on 11 offers in a row, and that's because we're in a rising market. And so it becomes more difficult, but there's certainly different things that we're trying to implement to try to get in front of this market that's inevitably going to get harder before it gets easier.
Well, I'd like to think that if anyone can buy it, it's you and your team. You guys buy for strategic a lot of the time. For me personally these days, given the time I've got and given how hard it's gotten as well, it makes sense to use a professional, even for someone like myself who is a professional in the space as well. Yep. The manpower on the ground, the strategies involved. We're going to talk today about some of those secrets that you guys have picked up over the years, the IP, so that all the listeners today who may be interested in hiring a buyer's agent, may never be interested in hiring a buyer's agent, to be able to secure a property can maybe implement themselves or think, well, maybe that's a little bit too hard or too time consuming for me. Whatever it is, that reality we'll talk. So we'll share some of those stories. I'd like to firstly reference again the dynamic, the power shift that's occurred from buyer to seller, from sales agent to buyer's agent over the last 4 years. So 4 years ago, I remember myself prolifically buying properties as well for clients. You'd have agents calling you multiple times a day saying, hey, I've got this on market, off market. And the question would be, Trent, what do you want to pay for it? What will it cost me to take it off my hands, sort of thing,
Yeah,
right?
exactly.
The time would be afforded to me to be able to do my numbers. I would always focus on subdivision development properties, obviously. You guys do a lot more, a broader spectrum when it comes to purchasing. I would do my numbers. I would say, look, I can pay you 500 grand, knowing that they probably want 540, 550, 600 even. And oftentimes it might be a 505 or a 510 that gets the deal done, and that the money's been made already in the purchase. If I needed to buy a couple of properties a week, just myself off my own back for clients, it was easily done.
Yep.
Share us some of those stories that extend further, if you can, on the dynamic, so that people can get a reference point for where it is in those times. One day it will get back to that again. One day we will see a downturn in Perth again if people are more interested in buying in that time of the market. Then we can start to bring it back to slowly what it looks like today for us.
Yeah, and being in other markets, obviously being from Victoria, been here for 10 years now, and being predominantly an East Coast business prior to buying in WA, we've been through different cycles. So we're seeing this same cycle play out recently in Brisbane, in Adelaide, in some regional markets, Geelong, Ballarat. So I suppose the beauty for us is, although it's new for a WA context, that we're seeing a rising market where stock's tight, and it becomes really difficult because it's hard to justify what we're paying now when you consider what we were paying in 2018-19. But we're still very early phases in the cycle, and what we're seeing in Brisbane and Adelaide, I suppose, demonstrates where markets can get to and how challenging it can get.
It's like looking into the future a little bit, isn't
Absolutely.
it? The culture, the behaviours, they're not unique to those cities. They're
Exactly.
not unique to Perth. You can look forward into some of these markets that have already received that time of the cycle. And there's a little bit of a safety net in Perth, isn't there, for us, that we were generally behind at the end or the start, whichever way you want to look at this circular cycle of growth.
Exactly.
Where you can learn the lessons from other cities, and you can also be insulated as well when it comes to prices, given our price point right now.
Exactly.
So 2019, tell us a little bit more about what life was like back then.
We're at now where Brisbane was 4 years ago. So 2018-19, it was a playground out there. There's so much stock on the market, and you become quite fussy. And
expectations from your buyers would have been very high.
Absolutely, because you're buying into a soft market where there's no confidence. So we've got to structure good deals. So the client's expectation, if something is on the market at 1.2, that we are buying at 1.050. How that's changed significantly. There's one we just missed out on, Duncraig, as we speak. There was advertised from high nines, and there's an offer on it at 1.2. We've got 10 buyers agents on the ground. We have education every week to talk through different scenario, what's happening in the market, because you need your finger on your pulse. Because if you go into a market now, and you might have been looking at properties 12 months ago, and prices for properties are going on from 1.1, expectation it's probably going to sell around that, well, you're probably going to miss out, because the market's moving that quickly that sales 3, 4, 5 months ago is really irrelevant. If there's a street sale that sold 6 months ago on the same street that you're buying, and you're referencing that as your price point, well, you're going to miss out. You've got to be in front of it. What sold last week, what's currently under contract. Information in this market is so powerful, because what sold last week, what's under offer this week, is so much more important than what sold 6 months ago.
Yeah, and that data is not often available to clients, to buyers out there right now, to the general public, that stuff that's quite fresh. I want to talk about servicing and affordability as well, and reference the time frames too, because I think that's becoming a bit of a factor for a lot of well-to-do, aspirational people that are in their 30s, 40s, got the young family with the dog, and maybe 3-4 years ago they were looking to buy higher ones. I've got some clients of mine who have been coming back to me saying, Trent, we're thinking about making that purchase now. They were talking to me 3 years ago, and they still want the higher ones. I plug it into the mortgage calculator, and they're at 1.2. Servicing probably wasn't as much of an issue to double check.
Yeah, absolutely. And that's made it really difficult. Like I said, if people were in the market 2 years ago, two things have changed. Their serviceability's changed, so they can't afford what they probably could have. But the market they're trying to buy in, what you could get for high ones, is now low to mid twos.
A lot of people haven't really caught up to that or accepted that, have they?
Even for us, we're buying in these markets all the time. How do we pay $950 for the same property we paid $850 12 months ago?
Psychologically, it's hard
to get your head around. And as buyers agents, we're constantly toying with this. Having the experience on the East Coast, you see buying in a Melbourne market in 2012, where we're buying in Richmond for $1 million. Now buying in 2015 and 16, buying that same property for 1.5, that's now worth 2. You see, you've just got to get in front of the market. If we're going into a rising market, which I think we both share the belief based on the data that we're tracking, we're very much moving into probably quite an aggressive market here in Western Australia once we see confidence back in the market with the cash rate. So trying to buy in this market is having confidence in where it's going. You sort of can't have hindsight in mind of what things traded for 2 years ago, 1 year ago, because otherwise you're just going to continue to miss out, and then you're going to be in the same situation in 12 months' time, and then you're going to be looking at what traded in today, in June 2023, and go, I wish I had got into the market then. We've seen this play out in COVID. COVID hit, there was a lot of uncertainty in the market. Where we're at the moment, there's uncertainty around interest rates. When you look at the best buying, it was really in those sort of first 6 months in 2020, right? And then people who were looking in the market in early 22 were going, oh, I can't believe what this traded for in 2020. I've missed the market.
Yeah, I've said this a number of times. I call this non-buyer's remorse. I have a specific couple of mates of mine who in 2020 were looking in Mount Hawthorn on Coogee Street for one of those standard 480 square metre
character homes, 1935.
950. And
now it's 125.
Yeah.
But it's going to be 13, 14.
Because it keeps getting away from him, two things are happening. One, he has that remorse that, oh, how can I buy it now when I'm paying more than it used to be? I'm overpaying now. That's a perspective. But also, the serviceability keeps eroding and eroding and eroding.
Yep.
And now it's nearly a case where he couldn't even afford it anymore.
Absolutely. And there's macro factors as well. You pick up the newspapers, nothing but bad news. You've got low and cash rate continue to go up. So I understand there's uncertainty.
You'd hear this every day, though. That example that I've given you is something I assume you would see every day, and there'd be a lot of people who have probably come to you defeated, fallen on their sword, and gone, if I don't get some help here, or if I'm just never going to buy a property. I have all the preparation possible. And I would assume that a big part of the help, on top of the manpower and the relationships with sales agents, is actually the education to say, mate, this is the reality. If you want to buy that property that you think's put 1.2, that comes on the market for 1.2, you got to budget 1.3, otherwise it's just not going to happen for you. How many times do you have to see the data, have to rock up at an auction or rock up at a home open and have 30 people through for you to accept those facts, especially in those aspirational areas that sit between probably your West Leederville and City Beach?
Yep, through to Cottles, 100%. And the perfect example is, and this is what I say to the buyers agents, if you're not buying, and it's not going out there, the good deals of buying significantly under market value are gone. They were back in 18, 19 and 20, right, when people on their knees and needed to sell.
So what's the service now? If
it's getting into the market, and that means paying what something's worth and not trying to be too cheeky, too creative. It's trying to create solutions, and I'll talk about different ways that you can put a deal together that's not just focused around price. We'll talk about that in a moment. But the key is getting into the market. And the perfect example, we had a client that was looking in Claremont back in 2021, and at that point in time, their budget was low twos, and we were really pushing hard to get a good deal. We found something at 2.1. We thought we were buying quite well. It was probably worth 2.1 at the time. We weren't getting an exceptional deal, but we're paying what it's worth. We probably didn't push the client hard enough at the time to say this was a good strategy. We're buying in a rising market. Fast track, 6 months later, they didn't proceed with that purchase. 2.1 budget in Claremont was impossible. They needed 2.5. So they end up getting pushed out of Claremont and get pushed into Mount Claremont. So we've actually done a client a disservice by not giving that advice about getting in the market when you are buying in a rising market. So the responsibility lies with us, and our job, our duty to our clients is to give advice to get them into the market. Otherwise, we're going to cost them money in the wrong time, because if they're sitting there for 6 months and the market moves by 5-7%, all of a sudden, at that level, we're talking a couple $100,000.
It's easy to look in hindsight, though, and it's hard at the time, whilst you may have an inner confidence that sits deeply in you on your experience of how this feels based on other markets around the country, about what the data is telling you empirically. When you're consistently fighting the fear factor of the media, of the general herd mentality that is generally looking to turn the herd around and go back where you came from, then it sometimes is hard to stand up with fortitude and say, I know this property will be worth more in a year's time. Because the last thing you want to be is that snake oil salesman that some people suggest people in real estate can be, who are spruiking things that haven't happened yet.
Exactly. The facts of the figures are what the market we're buying in today. That's the only known, right? What's it going to be in 12 months?
Conservatism is the safest environment sometimes as a consultant. But then, as you have pointed out, you can look back in hindsight and go, I wish I wasn't so conservative with these clients at that time, because my gut feel was correct. We are exactly where we thought we were going to be. And the gut feel continues to stay on the same path. Between you and I. We talk every week about where the market's going, and my perspective on this is exactly the same as yours, and that there is only one direction this market can take. There is noise around interest rates in the same way there were noises about COVID.
Exactly.
There are noises about global uncertainty, which, to be frank, seems to be a theme of my life. Since we've been born, there's been global uncertainty. I don't know why that fear keeps becoming fresher and fresher.
It recycles itself.
Yeah, it does. It recycles all the time. The what has continually moved in a direction that supports qualitative assessments all the time is that demand-supply dynamic. And
Absolutely.
I need to keep harking back to everyone listening here. This is the fundamental power play in any market. It is the relationship between demand and supply, because what it does is it paints a picture of the key data points, which are population growth and wage growth on the demand side, and construction and mortgage stress on the sales side. Those are the 4 points, two on either side, that determine where prices go in any city in Australia. When you boil it down, it is that demand-supply relationship, demand being tracked by weekly transactions. You can look at it on rewa.com. It's really not hard to find. If you track it every week, you'll see where that lies and how strong that number is and remains, versus supply. And this is the most important number that is so easy for everyone to understand. If you just had a notepad and you keep writing this number down since 2 years before COVID, as I've said many times in this podcast, you would see that number reported by REWA run from March 2019, which was 17,000, through COVID, where it hit 15,000, then 13,000 being a balanced market, then 10,000, where we start to see growth in the market, then 9,000. Then at Christmas time this year, it was 8,000. Then at March, April this year, it was 7,000. And then we've just broken through 6,000. The natural zero needs to be about 800 properties, because that's the amount of properties that are coming on every week right now. We are buying 950.
Yeah, we're losing 150
We're
properties
losing
a week.
150 properties a week, and we've been doing that consistently since COVID. That's why the number keeps dropping, because we are not selling as many properties as we are buying, and that number has not changed. That dynamic has not changed, and it keeps getting tighter and tighter, and mobility keeps getting worse and worse. And now we're in a situation where even people who have great equity, have their houses paid off, are ready to buy cash, can't even sell their own home because they wouldn't know where to live.
And that's the biggest bottleneck in the market, right? But back to your point, we've got a situation where demand significantly outweighs supply. And if you look back at any market in Australia, when you've got those factors where demand outweighs supply and a market is affordable, we're going to see a run in prices. And that's what we're seeing in Perth, right? There's still an affordability play here. The only uncertainty at the moment is around cash rates. And this is what I'm speaking to clients all the time. We don't know where the cash rate's going to finish, but we know we're much closer to the top than we are from the bottom, right?
Well, we thought so. We thought so at 1.5%.
Yeah,
we thought
did,
so at 3%.
At 4.1, general commentary around, particularly the majors, is that we're closer to the top than we are the bottom. We do know that cash rate at a point in time, whether it's in 3 months, 6 months, 9 months, will stagnate and potentially come down at some point. At that point in time, you think it's tough buying in the Perth market at the moment when there is a level of uncertainty around the cost of money? Fast track to 6 to 9 months' time, when there's so much certainty in the cost of money, when it starts to trend down, then you've got a combination of local buyers, owner-occupiers, competing with East Coast investors, which we've seen a real surge in the last 12 months because yields and rentals.
Part of the buyer profile
it is.
And it's a huge part of the profile of the listenership of this show these days. And again, we don't market to the East Coast, so they find us.
Exactly, because they're interested in the market because yields and rental returns are so much higher in Western Australia than they are in the rest of Australia. Exactly.
People over in Sydney, Melbourne, Brisbane, they make the same, if not less, than people in Perth. They pay the same mortgage. So a lot of the time, just to get their foot in the property market, they're actually looking now to buy in Perth,
affordable market,
just to buy into a market that consensus says is growing, which is great. You want to be buying in a growing market, but also just at a price point they can actually afford for a reasonable brick and tile house.
600,000 doesn't get you anything on the East Coast, where in Perth, you're in the market, you're in the capital city.
You're in a family home.
Exactly. So that affordability plays a huge role, but also the yield. So if you're going to buy an investment property in, hypothetically, Brisbane or Adelaide, you're looking at sub 3% yields. When the cash rate is at 4.1 and you're paying close to 6% of interest rate, but your return on that's only high twos, then it doesn't stack up. Your cash burn's too significant.
Yeah, the negative gearing is a factor.
Yeah, it is massively. But where you're buying into Perth, and this is where a lot of the East Coast investors are coming in, you can buy an established house at 4.5%, which means you're buying units and apartments at 6.5%. So speaking to the agents who operate, say, East Perth and the city, they're getting a lot of East Coast interest to buy up these apartments on 6.5 because it's cash flow positive. The only place in Australia where you can get cash flow positive properties is Western Australia.
Yeah, but it has been. Perth's always had the highest rental yields in the country.
Yep.
And that's because our property is undervalued compared to the cost of living and compared to rental prices, right?
Yep.
Rental prices are a part of cost of living.
But look at the rental space at the moment. The balanced market for Perth in the rental space is typically around 10,000 properties in the rental space. We're now down to a space where we've got sub 2,000 properties on the market.
It's
for
been
rent.
like that for
So
quite a while.
what are we seeing? We're seeing rents continually rise and rise again, and that's not going away. And the inability to bring on stock, which you can talk through the building improvers, is only going to put more stress in this rental environment. So if yields continue to rise, that means we're going to continue to see East Coast interest competing with local own occupiers, competing with local investors. Once money starts to become cheaper or stagnates and the confidence returns, that's when the herd mentality starts to progress. So we're in a situation now where we're really only competing with own occupiers and some East Coast investors. There's not as much local investment, and it's very difficult to buy in the current environment. Like I said, we've got 8 buyers agents on the ground. For us, who do this every day, and we typically transact 20 properties a month, we're finding it really difficult. But fast track 6 to 12 months, this problem's only going to get worse. So my advice to anyone looking to buy is try to understand where the market's going. And yes, it's a difficult environment, but it's definitely going to get harder before it gets easier.
Let's talk about the secret sauce. Let's talk about some of those strategies that you recommend people start to consider implementing. Obviously, one of those is get ahead of the market, pay a bit more than you thought you had to. It's a strategy to buy a property, but there are some far more effective ways that I know that you guys are having those strategic, pardon the pun, conversations on a daily basis with a lot of these real estate agents. Surely the first one would be start to build relationships with the real estate agents sell the properties you want to buy.
Oh, without a doubt, you need a strong relationship. It's very much a seller's market now, and agents carry a lot of weight. So it's important to have a really good relationship. They're there to do a job for the seller, and that's to get the best price. Making sure you're working with them and making their job as easy as possible is what we try to do.
How do we do that as a buyer?
It's been really transparent. It's been naturally just being a good person and trying to actually understand and respect their time. Not walking through a home opening, asking for everything and giving nothing back in return. So being very transparent, getting back to them, sorry, we can't proceed on this property because it's outside of scope or it's outside of budget. Open up communication channels. For us, we've established these relationships back in 18, 19 and 20. So most of these agents now are our good friends, not just people we buy properties off. We're off having coffees and beers on a Thursday or a Friday because we're able to build a strong relationship. But for those just getting into the market, it's very difficult. But the worst thing you want to do is go in a home open, demand everything, try to overcomplicate contracts with ridiculous and unfair clauses.
The seller's agent, even if you've got a price that's reasonable, is just not going to bother recommending.
They don't need to. They don't need to.
Yeah.
And understand, when you look at the cycles, what happens on the East Coast, let's look at Adelaide for an example, very similar to where Perth was probably 4 or 5 years ago. In the same environment where rents increased significantly over a period of time, the market started to heat up. Adelaide typically is a private treaty sort of a market where there's a lot of properties sold, like they do in Perth, away from an auction environment. Perth's going to have auctions. In the next 2 years, wait till you see the market turn from a very much a private treaty environment to an auction environment. And then the ability to buy is even more difficult because you don't get more of a transparent environment when something's...
who wins is the person who pays the most.
Who's got the deepest pockets.
Okay.
Then all strategy...
Which is not a win.
Then there is strategies to compete at auction, and we can talk through that in another episode because it's a different beast. But my advice to clients is you're in an environment where you can get a point of difference because you're in a private treaty environment where you've got a buyer and a seller, you've got an agent in between where you can start to leverage off the relationships. So the advice is, obviously respect the relationship, respect the sales agents, understand what they're trying to do. It's easy to get frustrated when you miss out on a property and go, well, that was unfair, you didn't advise me.
Don't burn your bridges because
exactly.
they'll probably sell the next property you're looking for.
Don't burn your bridges, and they've got a job to do. And if that's to get the best price for the seller, they've done their job. You've got to understand who they're working for. So respecting that relationship, but also trying to make their job as easy as possible. The deals that we pull together, and I look at still 70%, 80% of the properties we buy are off market. How do we do that? Because the argument is, why would someone sell a property off market? Well,
you miss market, yeah.
Yeah, exactly.
It sounds crazy.
It does, but there's more than just money at the end of the day for a lot of people, right? There's privacy. There's always, the ability not to disclose why they're selling. There could be family situation, or, we've seen divorces where people want to keep things very private, or they're in a situation where they may have overpaid and have over-leveraged and they need a quicker sale. So it's being there at the forefront to be able to give a seller more than just the price. Probably 30% of the deals that we're pulling together at the moment, we're offering longer settlements and leasebacks. So that gives someone an opportunity to, as a seller, what's the biggest problem in the market for a seller and why won't they sell?
Lack of mobility.
Where are you going to move to?
Yeah.
You can't get a rental property. You can't probably even find anything on flatmates.com, and you can't buy anything. So the fear of selling, it's like, well, where am I going to go? So let's ease that burden. We'll give you a 6 month rent back and a 6 month settlement.
And if you want to leave in a month and a half, that's fine.
Absolutely. You've got the option to do that.
Yeah.
But trying to create a situation where it de-stresses it for the seller. And for that scenario, that means more than an extra $50,000.
It probably unlocks a lot of properties.
It does.
I reckon there would be 1,000 properties right now where the seller is actually wanting to sell.
More.
Probably,
Definitely more.
And they're just not taking it to market. And the reason they're telling the sales agent who's looking for listings, because one thing they don't have is listings, obviously, is, look, I would sell, but only if you find me somewhere to live.
Yeah,
and they can't.
Well, think of the last portion
that's their job right now, is just mobility.
Exactly. Well, think of the last portion of owners. Typically baby boomers or people enter into older phases of life. They're on bigger properties and they need to be downsizing. But where are they downsizing to? So we've got
No one's building apartments.
Exactly. So I look at the one we just purchased in Leederville 4 weeks ago. Older lady, need to find a downsizer property. So fearful to sell because so fearful to be homeless. And that's how we structured the deal. We paid 1.1 for a property that I honestly believe it goes to market, could go for 1.15, and we're not shying away from that. We're not trying to buy under, but what we've been able to offer her was a 6-month lease back free, because who wants to rent their own property back? Instead of saying, we'll give you 1.2, we'll give you a 6-month leasing free period where you can live in your own home while you find something else. You've got the money in the bank account, so then when you put offers forward, you can go in with clean terms. And then if you need an additional 6 months at market rate, we can offer that as well. So she's got the security that for at least a year, she's going to have money in the bank account where she can go around and start looking for opportunities and being able to put cash offers forward because the money's in the bank account. One thing to offer a long settlement, but the long settlement doesn't help a lot of buyers because they need the money in the account for the serviceability. You go try to buy a property now with a finance clause, good luck. You need to have a point of difference on your offer, and that's offering really good terms, not just on a price.
How many of your clients are, I've seen this a number of times now, I'm not sure whether it's something that is advisable, it is a risk, but is a calculated risk I know a lot of people pull off quite well, is they'll be putting cash offers in where they're not cash, but they've got pre-approval from their bank and they know that they will get the money, obviously.
Yep.
And they will put a 60-day cash term in where obviously it's not cash, but the
Yep.
first 30 days is them just getting their pre-approval finalised to a full approval, and then they settle. Do you see that a lot? Is that recommended?
95% of our clients are in that situation. And this is probably the most misunderstood thing in the industry, and sales agents sometimes can get a little bit upset when you talk about cash offers. Cash offer isn't
a cash offer.
I've got $1 million in the bank account.
Here it is.
Because why would you? Like a property, the beauty of investing in property is leverage.
Yeah.
So even if you have $1 million in the bank account, you'd be doing yourself a disservice by not using the bank's money. So then when you get a valuation through and they're like, we need to get the value through next week, the selling agent goes, well, it's a cash offer. Why are you getting a valuer through? Doesn't mean it's a cash deal. It just means
that
we're waiving the right.
Finance,
exactly.
Yeah.
We've got confidence, and if we can't finance it, well, it's our problem,
we
not
lose
yours.
the deposit.
Yeah. Well, and
we're happy to take that risk.
Yeah. But we won't take on a client, and this is why getting your ducks in the row is so important. You don't just go shopping day one without having a look of what you actually can afford, having a pre-approval in place, because it might get to the situation where there's a number of offers and the agent wants to call your broker to make sure you're good for it. So having a pre-approval, being really, really organised, carries a lot of weight. And so we work with our clients, we work with their brokers. So then for putting an offer on something cash offer at 1.2 where their budget might have been 1.15, we call the broker, are we going to have any issues on this? You've got to put some responsibility back on the broker, back on the bank to say, no, we're very comfortable up to 1.2. You can go in on cash offer terms because I'm very confident on the finance. That's their job, is to give their clients the advice on what they can and can't afford and what they can and can't borrow, and making sure you're talking to the clients if a valuation was to come in short, because understand, we haven't had a valuation come in short in 5 years since we've been buying here.
Speaking of Brendan told me, I think it was 4 weeks ago on the podcast, he said that he's not even using recent data anymore. He's using recent under contracts because
we have
that
to.
is
it's
the
a
most
moving
relevant,
market,
and that there's nearly no risk now on his insurance premium of overpricing it. The risk is actually that they may even be struggling to get the data to demonstrate what they know is value. Yeah.
Well, market value is, as we know, and this is what the one that just sold in Duncraig yesterday for 1.2. Arguably, it sold $100,000 over market value, but there's multiple offers, so you can't argue that point. That's worth 1.1 if you get 1.2 now, because if you've got multiple offers at 1.2 in an open, transparent environment, that becomes market value. So when I go back to it,
willing buyer, willing seller.
Exactly, yeah, in an arm's length transaction. So that's the definition of market value. So you can't argue that someone's overpaid for that because they haven't, and that's a valuer's job, is to support that. And they can't argue that it's not worth that when they've got a multiple offer situation. But in saying that, I'm an ex-valuer, as you know, I was a valuer for 7 years. We're conservative by nature. And particularly if it's an off-market transaction, that's when you can argue it's not market value because it wasn't in an open forum. So you're going to get to a situation, we haven't seen it yet, but we're going to start seeing vals come in short. The biggest problem is if you buy a property and you've gone in on cash terms and the valuation comes in $100,000 short, Well, the bank's only going to lend you what the value will come in, arguably what the value will come in as market
and then
value.
It's about having those conversations with the valuer.
Well, that's why we're making sure we're their clients. We're having those conversations. If this was to come in short, do you have cash reserves to be able to make up that difference for the extra $50,000 or $100,000? It's not that the property's not worth that, because we know we've got the data, we've got the evidence, we've got the under contract sales to support that figure. But it's been ready for that. Going into a rising market is a different beast, because we haven't been there in Perth since 2006. It's a long time ago. So you've got to understand what's coming. Auctions are coming. Valuations coming in short are definitely going to come. And you're going to come into a market that's a lot harder to buy than we're currently in.
Subject sale purchases. I have a lot of friends, unfortunately, not out of preference, out of reality, where because they're looking to upsize and because most of their savings equity is tied up in the existing property they've got, and because servicing keeps getting tighter and tighter, they're in this awkward position where they're living in the house that they've got right now with a mortgage that might be worth $700,000. They want to go to 1.5, but the only way they can actually buy that property is a subject sale, given the fact that they don't want to be homeless as well. The timing of that's really awkward, but also what is a reality is I don't know any sales agent that would sell to
no
someone
one's
who's
accepting.
subject sale right now. Are you noticing that too?
Oh, absolutely. Their job is to get the best offers for their clients, right? And you've got 3 cash offers, 2 finance offers, and a subject sale. Subject sale has been put in the bin. And that's what I say to clients. We've got clients that come in that same situation all the time, and it's just structuring that so you can get yourself in a situation where you can compete with finance terms and cash terms and still have a sale ready to go. It can be done. In the last 6 months...
Is it risky though?
Not if it's structured and if you're really, really organised. So we've had 3 in the last probably 4 months where we've bought properties and sold properties in that same settlement window. So we've got a client that is subject sale by nature, but we're not putting that in the contract. But the moment we put that in the contract, we've done our client, the buyer, a disservice because their inability to buy that property. But they've purchased in that window, and then within the next 4 weeks, we've sold their property, and then we've had simultaneous settlement.
Does that mean that you're just given the reality of where you're at, you may need to be a little bit flexible on your sale price to get the sale in the time you need to settle on the purchase?
So in that situation, we're using a finance clause as the safety net because you've got a 30-day finance clause. So in that scenario, if you can't sell that property within 30 days, well, the bank's not going to give you the money.
Yeah, you'll get your decline from
the
bank.
Of course it is. You're not doing anything wrong by anyone by not being fully transparent about what the situation is. You've got a finance clause. And if you can't sell the property, the bank's not going to lend you the money. But to do that, you've got to be really, really organised. Like you can't buy a property Saturday and then expect just to launch your property on Wednesday. It's having it ready to go to market yesterday. And then if I do find the right opportunity over the weekend and we've got an offer accepted on Sunday, this property's online Sunday night. We're having home opens Wednesday, Saturday. Within the first 2 to 3 weeks, that property's sold. And that can be conversed with the selling agent. And if you're fully transparent, say, look, this is a scenario. We back ourselves in. Here's the property. We don't foresee any issues. It doesn't complicate it like a subject sale. And it's showing the level of preparation that we're not just another seller that's thinking about buying something and then we're going to try to sell our property. No, it's ready to go. We've been ready to go for 6 to 8 weeks. We just haven't found the right property.
When we're buying a property, a lot of people are still nervous about dotting their I's, crossing their T's when it comes to building inspections,
due diligence.
Inspections. All that. You're buying your first house, your second house, your dad will still say, mate, make sure you're getting building inspection.
Yep.
That is an important factor in any purchase, especially when it's going to be the family home. But I note that also can be an impediment to competing. How do you guys get around that? Having still some safety around what you're buying structurally, but also competing.
Yeah, it's just been really, really organised. So hypothetically, so we've got properties now that we'll inspect on a Tuesday and they're not going to get launched until Thursday or Friday, right? We've got really strong relationships with the agents, but they'll come back to us and say, we've got to go to home open because we've got to do the right thing by the client. So we need a competitive environment. We can get you through before, but I've got an obligation to get as many people through the property, and we've got to respect that. So what we'll do, we'll get through on a Tuesday, so we're completing our inspection. We'll get the building inspector through there on the same day.
We'll put some money at risk.
Absolutely, yeah. We've got to get in front. So you're saying
buyers should probably avail themselves a bit of a pool of building inspector
without a doubt,
money.
A budget for, you think a $600 report for a building and pest, you spend 4 or 5 of them on a $800,000 property, becomes pretty insignificant pretty quickly. So we just get really, really organised. We go through on a Tuesday, we get the building inspector through, we do all of our due diligence, and you understand our due diligence process is extremely thorough. We go into a lot of depth in terms of what's surrounding properties, what the zoning, what the potential use for the property, what's underneath with easements, what's above the property, all that sort of information we can have done and ready for the Thursday. So come the Saturday, we've got an unconditional offer. No building and pest because we're comfortable with it. If there's issues, we've had a couple of days to call builders and say, is there going to be any risk with some beams in the roof, or we've got quotes, we can be really, really organised. So then come Saturday at the home open, we've got 50 groups that have gone through the property. Home opens at 12, it finishes at 12:30. We've got a really strong cash offer in at 12:45. And we've got the deal wrapped up by 2 o'clock on a Saturday. By the time people got home Saturday night, thought about the property, got up Sunday, went back and had a look at the property, ring up the agent on Monday to put an offer in, they've missed it by 48 hours.
That segues to our next question on tips for buying. Some people would be concerned about being the first buyer, the first offer, worrying that the sales agent will use that as a benchmark to be able to then play other offers against it, where he or she will say, oh, look, I've already got an offer that's, mid to high ones. And you might have a really strong offer there, but in a market like this, they use that to be able to garner better offers. The other side of the coin is to say, hey, Steve, when's the last minute you're going to be taking offers for? Make sure you tell me, and I'll put that in the minute at the end. And in that time, you could say, well, look, is high one still going to get it, Steve? Oh, nah, it's probably going to be a 2. All right, well, I can afford to. I'll give you 2 now.
Yeah, again, it's from an agent's point of view, you've got to look at what their job is, and it's to get the best sale price. And that's their obligation. So people can try to be cheeky like that, but I find often it just annoys the agent, right? If we try to be too cheeky and get our offer in the last minute, well, they'll say, well, I don't really need you guys. So again, yes, there's always a strategy, and I certainly will never present an offer for an agent to hold at a home open, because then the question gets asked, do you have any offers? Yes, we do. And it's well above the ask. Well, then that's when it's a situation. So I'll never let an agent have an offer in their hand whilst people are walking through. But after that point, I'm happy to be the first in and be really transparent about it, because if we're really easy to deal with and I've made their life easy and said, look, here's our offer, we are looking at other properties, which we always are for clients, right?
Yeah, we need an answer.
Yeah, we can't afford 48 hours because there's 2 other properties we may be considering. I don't want to be impatient. I don't want to push you too aggressively, but do you think you could present this to the owner within a timely fashion, being very respectful, being very transparent about that? You'll find that they'll be willing to work with you on that, rather than being trying to be too cheeky or try to reinvent the wheel. And understand, we've just submitted an offer, a cash offer with no finance terms, with no building and pest, and we've just given the owner a 3-month lease back for 0 rent.
That's as good as it gets.
Well, then why wouldn't they want to deal with that offer? They probably don't need to go back to the well and call up all their buyers.
Even if the price might not be exactly where they want it to be, they'll come back to you and communicate that.
Absolutely. So look, you're pretty close to the mark.
Basis, they couldn't beat that.
Exactly. We really like the terms, but probably $50,000 off on price. We have the conversation with the client and say, look, can we meet in the middle somewhere? Everyone's comfortable. We've got a seller that's got a really good price and really good terms. We've got a buyer that we think we've bought really well and we haven't overpaid. And we've got a sales agent that's been really happy with the process because they don't have a million headaches trying to orchestrate building and pests, trying to orchestrate a buyer that's never bought a property before. They're busy at the moment, right? So make their job easy, make them want to work with you, not the opposite. Because if you try to make their life too difficult, and I know other buyers agency out there complicate deals with these ridiculous due diligence periods, and you're never going to buy it. And that's the fact. And you're going to cost your clients money because you're trying to be too cheeky. We're not in an environment where we can do that like we could in 18 and 19. We're just not in that environment anymore.
Lachlan, it's been a fantastic chat today. I think there's some really insightful realities and commentary there that buyers, whether using a buyer's agent or not, can start to take on board when they hit the negotiation table coming up next weekend. It is a tough market out there. That is the reality. People need to accept the fact that they're probably not going to secure a property below asking price in this market, and that the reality is it's the terms, it's the flexibility, it's the genuine nature of the offer that is probably going to give them the best shot at buying in this market in West Australia at any price point, whether it's $300,000 or $1 million or $2 million or $10 million in Western Australia. They are all price points that are transacting right now in the tightest market since Kevin Rudd
07
was the Prime Minister. Lachlan, thanks so much for your time, mate, and I'm sure we'll have another chat about this in the future when maybe the power dynamic has swung a little bit to the opposite direction.
I think we're in for a long haul, Trent, so hopefully I'm on the podcast before the next 3 to 4 years, but happy to jump on and have a chat again.
Really we'll be having a coffee anyway. Thanks,
Absolutely.
Mate.
Thanks, mate. Bye.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!